Hey, look at that. We went to break. We came back. We ditched the chairs. That means we're going to have some fun. I'm looking forward to it.
Fun.
So I was talking to Phil on the break a little bit about some of the viewer questions that we covered on the last segment. And we're going to break it down a little bit more. I think that'd be good to do. So in case you're just tuning in, there were some viewer questions. Last one was, really about when you do enter retirement, about some of those changes that you need to make. Sure. And some of those changes, in fact, a really important factor, has to do with risk.
Yes.
And you explain it so well, Phil, and I want you to do that for our viewers today, if you would.
Let's take a look at this. First of all, now you are how old now?
Or do I need to say, I'm 65 in this example, right?
For 65.
I was like, wait, am I going to tell people my age?
Right.
Yeah, okay, I'm retired, right?
So, the first thing you want to look at is income pays the bills. So we got to make sure we have enough income.
Yep.
Right? So the first thing we want to ask, are you taking Social Security? Well, maybe you start at 62, whatever. But let's say we've got $2,300 a month coming in Social Security. Okay? Maybe receive a pension from the firm that you work
That'd
for,
be
the
nice.
company. So we have a pension here. So maybe the pension is, $2,000 a month. Okay? You're 65, so you don't really have required minimum distribution yet. Some people, right now that's 73, but so for now we don't have any there. You may have some investment income that comes in. You might have some rental property, some gains from that or something. We'll say we've got, let's say $500 a month coming in from there. We may have some dividends in our investment portfolio, something like that. Maybe we have, $500 a month coming in from there. So then this is the income that we're working with, okay? So about $5,300. So remember we talked in the previous section, we said, hey, what about that budget, right? Okay.
Yeah,
so,
what about that?
So maybe your budget is $4,000 a month, okay? So we're in pretty good shape.
All right,
then,
so
right?
that looks good.
Yeah, now if it's the other way around, maybe we've got some issues there.
Yeah.
So then we've got our expenses are about $4,000 a month. We've got $5,300 a month coming in, so we've got a little bit of discretionary, maybe another $1,300.
Okay.
So that's pretty good.
Yeah.
Now we have to establish our emergency fund.
Right.
In case, we need a new stove. Now I prefer gas stoves. I know there's been some controversy about that.
Yeah, that's right.
Okay.
But that emergency, so what does that need to look like at 65?
So, let's do 6 months expenses here. So we went about $24,000 in the emergency fund. The reason we don't want to put too much in the emergency fund is usually that's going to get a pretty low rate of return.
Okay.
So there's a trade out,
Well, that's
liquidity
more than I was
for
thinking.
money.
So, but I got you. Okay.
6 months expenses, not income.
Right.
Okay.
Right. Okay.
All right. And the budget would also include taxes, whatever your taxes are.
Right. Okay.
Okay, so we've got all that covered. So let's say we take care of all that, and we're going to say, oh, wow, there's $1 million there. Okay, this is what I would call the investable income.
Right.
So this is like, Phil, what are we going to do with this?
Right.
And I said, well, in the current situation with market and things, let's just stick to that rule of 100 for now.
Yes.
I mean, you might think it's a little old or primitive, but
it's
in this
genius,
market,
if you ask me.
In this market, it's not so bad. Okay.
Yeah, and it's simple.
So you're age 65. So basically, I don't want to put more than 35%, at risk or higher risk, okay?
Okay.
So the 35%, that's going to leave us about $350,000.
Right. Are you getting that at home? Because it's that simple math of the rule of 100, you take your age and subtract that, and that's how much you want at high risk, right?
Right.
Just want to make sure we covered that because it's so simple, but it's so smart.
And then on the low risk side, we want the other part. Now we can adjust that later with markets changing or whatever, but right now I would recommend that we don't get too far ahead of ourselves.
Okay.
So, there's a lot of breakdowns. Okay, what type of investments and all that, we don't have time for that right now, but just understand, we want this on the low risk side. Okay, this will take care of this. while the market's doing this.
Okay, so this is great information for viewers. What's a good way to start and just find out a little bit more about our retirement?
Jessa, let's start out with the booklet that we have. It's called The Changing Story of Retirement on my website.
Yes.
If you want to go and download that book, that's a good place to start, and then we can move forward from there.
Yeah, we mentioned it earlier in the show, but it's a 24-page read, lots of great information. Go to the website, check it out.
Right.
See us next time.
It doesn't have to be complex.
It doesn't. It's simple. Watch Lowcountry Money Talk too. Our next show will be coming up soon. We appreciate you. We'll see you next time.